Alright guys, so in this video I want to show you guys when it is the right time to sell a covered call on a stock that you own. So the scenario is going to be that you originally sold a cash secured put. Also guys, I have another video on this channel where I speak about when to sell a cash secured put. So make sure you check out that video before you watch this video, where we are going to speak about when to sell a covered call. So let's say you got assigned on your cash secured put. So now you own 100 shares of a stock that you wanted to own at a certain price level. Now, many people get greedy and they immediately want to sell a covered call on these shares. So they are looking for a price level that is above, for example, let's speak right here on Microsoft. Let's say you got assigned at 355. Immediately they look for a strike price above that assignment level where they can sell a covered call. And for this commitment, they are going to receive a premium again. So this is part of my strategy, the premium cycle. Make sure you click the link in my bio. I have a free course for you guys where I explain the strategy in detail. But the big mistake here is that they want to immediately collect another premium. So they sell a covered call to the upside where they commit themselves to possibly sell their 100 shares at a certain price. And for this commitment, they receive a premium. Great so far, all good. But I like to optimize my returns. And I have a rule here that I only want to sell covered calls when a stock is overbought. So I am waiting until the stock price is going to rise a lot. And there's different metrics here. I like to check all of them, but we can see right here that I have marked a trading range where Microsoft has its support and its resistance level up here. So I like to sell my covered call at the resistance level up here, because the main idea now is you want to benefit from a capital gain and that a stock is overbought, and then you want to sell your covered call even above that, because it is very unlikely that you're going to be assigned on your covered call and your shares are going to be called away, because the stock is already overbought. It is at a strong resistance level and you sold your covered call even above that. So I like to find out the resistance level. As you guys can see here, I have marked it. Also, I like to check the RSI, for example, the RSI 14, like right here. When it is above 70, then you can conclude that the stock is overbought and it is most likely going to come down again. Then it is also a great timing to sell a covered call on your shares. And depending on which stock you own, I also like to check the current situation where the stock is based on the 200-day moving average. And right here we can see that Microsoft is clearly in a bearish setup, as the stock price is sitting below the 200-day moving average. So here it would also be a good metric to choose the level of the 200-day moving average, where we can see that it is kind of like similar to that resistance level, somewhere around, let's say, 440 right here. So this is a good level to sell a covered call, if not even a little bit above that, on a green day and after a little run that Microsoft had, because you don't want to sell it when Microsoft is right down here and you just got assigned. You want to wait a little bit that it rises, and then you're going to sell it even above to get a meaningful premium and to decrease the chances of your shares being called away. And the nice thing here is, guys, if you are assigned on your covered call, there's absolutely nothing to lose anymore, guys, because you will lock in that capital gain. You will realize your profit from where you bought the shares and where you sold the shares, plus all the premium that you collected down here on your cash secured put. and all the premium on the upside that you collected on your covered call. So in regards of risk management, there is nothing to lose here anymore if you are being assigned on your covered call. We are only speaking about optimizing that profit to the upside. So I hope this video was helpful to you guys, so you understand when it is the right timing to sell a covered call on your shares. And if you want to know more about my strategy, the premium cycle, then click the link in my bio. I have a full course there for you guys, so you understand this strategy in detail. I have a step-by-step course for you guys. Also, we have a live community where I am sharing my trading setups, so you guys can benefit from that as well. So click the link in my bio and I will see you guys there.